Good evening. This is the Elliott wave update for the S&P 500 and the NASDAQ 100 for Thursday, April 11th, 2024. I was going to say it was an interesting day because that seems to be my broken record, but it truly was, but for different reasons today. And so let's kind of dive into this. I'm going to start on the 4-hour chart here in the S&P 500. And so this morning we received the PPI data. The initial response was sink it, but it stopped very, very quickly with a very large amount of buyers running in and buying it back up. And then pretty much on the opening, we kind of got a little bit of a drift lower on the opening, but that also was really caught way beyond making another low. And it just started to rally, and that's all it did for the balance of the day. Now, within the S&P, what were the major levels that really kicked this buying into not necessarily a buying spree, but kicked it into a higher gear? And really what was behind that turn? The PPI, as if you remember, as I discussed yesterday, that we had the probability that the PPI would not really be producing the same type of a move that we saw with the CPI, which was more of a shock and more of, hey, rates aren't going to be cut anytime soon. So it's not a matter of if, it's going to be a matter of when or if, both now being put together. So we get that report, and it basically was in line. There was one, I think, difference in the core, which was showing an increase in the core inflation. And so that produced that initial drop. But then, where did it really begin in earnest? And we have to remember that there's the Mag 7, all of which are in the S&P. And we started to see a little bit of reversal going on, and it was picking up again in NVDA. And then it started to spread. Then it was NVIDIA super micro, which is also now a part of the S&P. That was their latest ad. I think it was drop Walmart or drop something and add super microcomputer. Then from there, it started to spread. Then it was Apple. Then it was AMAT. Then it was AMD putting it together. Then it started to spread even more. Booking kind of caught a strong bid. Then it was Amazon. It was Google. And before you knew it, it was Meta. It was Microsoft. And before you knew it, everybody, including even Tesla, caught a bid. And what we ended up seeing was the reaction from yesterday, which was, okay, interest rates are not going to be cut. And the bond market really reacted to that yesterday with the 30-year bond dropping over 2 full points. And both the 30 and I believe the 10-year beginning to really hover and stick around 4.5, maybe even pushing a little bit higher towards that 5%, which is where we started to kind of pull back from. And now we're going back to. So there's still a lot to be said about what's going to go on in the treasuries and what effect can that or should that have on the equity markets. You would think that the equity markets would not rally as hard as they did today. But again, I've mentioned it. I'm going to continue to follow up with it and hopefully beginning to be adding more about options flows into this analysis process, because it really does have an effect on the move during the day, during a trading day. Now, here in the S&P, it was 5,200 in the SPX, 5,200. Let me just double check to see where this will be closed. It closed right there at 5,200 for all intents and purposes. And so the future, the mark was truly same around 5,200, but a little bit more. If we have to include premium, there's still about, $40 to $45 premium in the NASDAQ, excuse me, in the S&P future over that cash market. That also produced a level that once it broke here in the S&P and in the futures market, it was a straight shot up and it climbed very quickly. So let me drop out of the 4 hour. So let me just start with the count, and then I'm going to go break it down a little bit. So I feel that overnight now, and it could have been right as the PPI was announced, because again, being a 4 hour chart, it goes from 2 a.m. my time, Pacific, to 6 a.m. and that number came out at 5:30 a.m. Pacific time. So it includes the number, and the number, it dropped, and it did now move to an additional new low below the Wednesday. So again, 3 points again. And so that made it cleaner for me to go A, B, C. Because I thought I could have to put the C there, but nope, I can put the C here and then put the 4 underneath. Now, what does that also suggest? Again, I'm not replacing it, but I will continue to run them side by side, because I have to tell you, there's an outside chance. There's still a chance. And this time it's not going to be due to the options flow. I mean, it could be any switch in how the options are going to be traded, and what that options flows will reveal. Are they going to be selling versus buying calls? Are they going to be selling calls again? Are they going to be reversing out of these positions yet again? Because that's what they had to do today in mass. And it started in NVDA, where we saw the call buying. Remember that on Wednesday, NVIDIA got smacked pretty hard. I think it dropped to a low of about 830 and then recovered back up to about 850. And then today it ends up 35, and that was plus what it did end up doing yesterday, as we traded higher most of the day after that initial decline from the CPI. So putting that all together, it really, I have to leave open the potential. I'm not actually counting it that way, but we could see a reversal. And then it really would be not so much the options, unless it starts overnight. But I read a little news blurb. It actually was a headline that the Department of Defense here in the United States is now reporting that a strike against Israel or Israeli targets or Jewish targets within the United States, is a strike is appearing imminent, and that would be the retaliatory strike from Iran back against Israel. But there has been also talk, I guess, in the chatter, that whatever they monitor, that the U.S. assistance and the aid and the support that the U.S. is giving Israel puts them up there as a target. Now, of course, in my mind, I'm like, well, that would be pretty much a disaster to try to strike inside the United States. But hey, the potential, now it's there. We're seeing how things can spread. It's there. I'm not saying that's what's going to happen. I couldn't tell you what the market reaction may or may not be. I would believe that if that war in Israel escalated via Iran jumping in a retaliatory strike, I would think that we're going to get a reaction from the market. I can't see that the market is going to continue to buy because, well, it's expiration and we're doing our gamma. I do think that we might see a severe reaction, but in lieu of that actually occurring, and maybe they wait for the Sabbath, maybe they wait. So we get through tomorrow, and before, sundown, then they get a strike. That's kind of my thought. In any case, that being said, let's drop down to the 1 hour chart And so we can take a look. Nice and clean. It actually was nice and clean. 3, 4, and then this nasty looking, but okay, 5. And then we put the C and the 4. And then what do we get here? We get 1, 2, 3, 4, looking for a 5. And then to put the A wave there. So A of the larger minute 5, right? So it's looking, right, you can see 1, 2, 1, 2, 3, 4, another high for 3, and then a 4 and a 5. So if I gotta start marking, if that's going to be the end of the 4, then we could do the following. This would be again on that hourly chart. Let me just take this down. Let's take a look at the 15-minute chart before I start marking things up. Okay, so here's the low, that's 4. And if we got 1, 2, and then 1, 2, 3, 4, and then we should get a 5. Now, if that's the case, right? We're just doing 4 of, this is 4 of 3, right? This is 1, 2. 1, and even I could go 1, 2, 1, 2, 3, 4, 5 of 3. So which no matter which way I look at it, but it might make a little bit more sense if I go 1, 2, and then run it from here. So we're going to put we're not going to go quite, and then we're going to go up to here. So you can see 52.64. That one we need to get above that level, which was 57.58, 52.58. 64, if we're done with 3, we come back down into the zone for a 4, and then we run again. And then that just completes wave A of this minute 5th wave. So that would put us out into next week, starting earnings for the rest. Now, these are not going to actually, that's if this 3rd wave is really going to be explosive. So I'll leave them there for right now. But here, this is for the 5th wave. So 100%, or wave 5 would equal wave 1 in the minute degree, comes into 52.96, 5,300. Well, we've already been above 5,300. So we need to get further in order to complete minute wave 5. So we're looking at 53.72, and then we have 54 up to 5,500 almost. And that would, again, I was like, okay, I'm not really looking for that. But here we are again, staring it in the face, going like, is it possible? Well, yes, it is possible. But is that something I would be expecting? Not right off the top. No, I wouldn't. I still think that's like, was more broad-based today, and the trend showed us that. That's a pretty strong trend. Advanced decline. So, that continued to support the rally, and actually gives us a little bit of support going into tomorrow that will continue. And that would be, if we don't get any additional news, it's going to upset this apple cart. I know we had a few earnings, and we got the JP Morgan tomorrow morning. I think it was, let me just double check something. I tell you, Bank of America, did they report? I don't know. No, they report on the 16th. So that's next week. I know it was somebody, maybe it was Wells Fargo reported today. I'm going to take, yeah, it doesn't make any difference. Yeah, we did have some reports coming out today. And then again, we have JP Morgan tomorrow, and I believe Goldman Sachs comes next week on the 15th. So tax day, good for us. All right, so back here to the 15-minute chart on the S&P. So you can see that how we're counting this. We're looking for 5 up, and that's going to be A, right? Remember, it's a zigzag. It doesn't actually need to be. I take that all back. I take it all back. Now I'm confusing my two counts, the S&P to the NASDAQ. And then in the S&P, it is not a diagonal triangle. So it's a straight 1, 2, and we're looking for the completion of 3, and then we get a 4 and a 5. So here we are, 1, 2, and we're inside of 3. Even if I go 1, 2, 1, 2, 3, 4, we're still looking for a 5 of 3. I'd be looking for 52.64, maybe as high as 52.79. Depends on how strong they want to be overnight, and then again coming in tomorrow morning. And then we get a pullback in a fourth wave, and this is the previous fourth of one lesser degree. It's going to be this right here. We come back into there, and then we do a 5, and that one, well, I will have more for, because this is just for the third. But we need to get above, back out to that hourly chart. We need to get, there you go, above here, which is 53.33. Now, if we kind of can get above 5,300, it should not be that difficult. Now, where are these points in the S&P that are going to be real important for options flows, for gamma flows, for a lot of things of that nature? There is a call wall at 5,300, and that's in the SPX. So we'll be looking at a move likely above this high. If the SPX gets to 5,300, and we're to do that tomorrow, boy, it would be quite the rally. Whew. But it would project higher, since we have that about a $40 to $45 premium in the future. So we'd be looking at 43.45 to 43.50, 53.50, excuse me. Whew. Now, possible. It is possible. And again, breaking this back down, we'll go back down to that 15-minute chart, and we're going to go inside this. It's very clean, 1, 2. It's like, there's the 1, ABC 2. And we're doing a nice 5-wave structures up. We got a nice ABC down. Now, they may want to start to take it down even a little bit more, but I'm looking like it should kind of hold its own. And if we'd have to run it from there for the 3. No, I can run it from here. No, because it's the internal 3. So you kind of have to run it from here. And let's just run it just for the exercise. 236, well, 382 is 52.33. So it has a little bit more room that it could come down for sure before it rallies. And should that occur, then we just adjust this, where we're thinking this little 4 completed. If they move it down, then this will come down with it as we expect the rally. What could upset that apple cart is we get something stupid geopolitically, something really kind of bizarre that's really going to toss the world into a tizzy, and then the market would be expected to react. So right now, I'm looking for additional upside. Tomorrow is expiration. As far as data, not much. We have import price index and consumer sentiment, the preliminary for April. Okay. And at 8:30 a.m., import price index. At 10 a.m., consumer sentiment. Couple of Fed people out talking again tomorrow. I did not read any news about what they all talked about today. So the market didn't want to seem to pay attention what they had to say, if they said anything about, gee, we'll look at this as far as what the economy is doing, et cetera, et cetera. So let's take a peek. Let me go out and let's take a look at the daily. And we'll take a look at our moving averages. And you could see, like, we had this great move today, right? Strength by strength. But yet, look at that. This is interesting. That's today. Let's see where this thing is. Today, the 11th. We had a rally. Did not even budge the relative strength. So what's that going to tell us? Is this sustainable? Are we going to build on this strength for tomorrow? Moving averages kind of agree. It's like, well, the 50's flat. So, the 200's flat. I mean, they got a little bit of angle to them. The 13 and the 20 are flat. That's on the daily. Let's take a look at our 4-hour chart and see what it wants to tell us about the moving averages. Well, we got the 200 that kind of slid through it, came back above it. Once it did break, which is at 52.10-ish, 11, it accelerated, which is what it should do. We have, again, we've got the 50 up here, and we're going to struggle to try to get back above. So we got, again, the 4 and the 8 after all of this today. The moving averages were not very responsive. They all both turned and started to head higher, but look at that. That's pretty good, strong, but our relative strength within the market was limited. Interesting. Interesting story being told via RSI. Let's go over to the NASDAQ. In the NASDAQ, open it up here on the 4-hour chart. It's still wild, woolly, and crazy. But bound and determined that I got to keep the S&P and the NASDAQ, since the major Mag 7 stocks are the ones moving and pushing in both of these indexes for right now. So what do we got? What are we looking at? Well, I left the 3 there, and then we got an ABCX, ABCX, ABC, which ended in a slight failure because it did not. So the low this morning was 53.50. Actually, that was yesterday. Today's low was 88. So I backed all of this up. And I thought, okay, that C wave ended yesterday. Slight failure over Wednesday. So this, actually last week, sorry. Last week to yesterday was a slight failure. This was 53.50. This was 51.50. So $2. I go with it. That's wave C. There's the end of 4. And difference is that in the S&P, that happened today. So, and not yesterday. Now let me go back. Yep, this was yesterday. And this is today. So that is when the PPI came out, and then NVIDIA jumped right into the works. And then here we had the opening. They drove it lower. And then they just started to buy it, and that's all she wrote from there. And that break here in the NASDAQ came at 18,300 basically. And that's where, boy, gamma, everything else just really kicked in, and it really just kind of roared with the fact that NVIDIA was up 35. We had our super microcomputer up 28. It was up much higher earlier during the day. We had Netflix up 10. We had Apple up 7.25, $7.26. Apple saw the gamma just really get ruckus in Apple. AMD, Amazon, Booking caught a bid, Google caught a bid, Meta, Microsoft all caught bids. So the major players within the index really took off and produced a very solid. I mean, at one point, I do believe that the NASDAQ was up over 300, and I know the cash was. So what does this all mean? Well, if this is 4, I'm looking for a 5. Here we are in a diagonal triangle. So once again, if I can get 5 up, then I'm going to label it A. Then we get a 3 wave down, I'll label that B, and then we get another 5 up. So it's a zigzag to put in minute wave 5. Now, right off of this, where I'm looking at 1 to 4 to get the gauge on wave 5, then we have 618 at 18,610, I'll call it. So in that hood, I think is where this little A wave can finish up. Then we're going to get a turn, and then we get the C wave up. Could this all happen tomorrow? You know, it really could. When you consider everything that they did today, and it pretty much was nonstop once it got itself going. Could it do it again tomorrow? Yes. Now, part of today was, it's like, as far as trading goes, there were parts of the day where it's just like, okay, market, make up your mind, because in your trading account that you got tighter risk parameters on, it could have been problematic for you. It wasn't just where you could just buy it and just hold. If you got a little bit rushed in your trade and, you got a turn in the market and it would drop maybe 10 or 20 or 15, 25 points or so in that area, that could be a lot in the futures market when you're running a tighter risk profile. And so that could create problems. But overall, today produced a lot of really good trades if you had the patience and you could just sit. Because, yep, there were little tiny pullbacks, but it would just walk its way out. It just would go a little bit higher. And it would break another level, break another level, break another level, and just continue to go up. So as long as you kept your resistance levels in line, and as they broke, you just added your position because it just was going to go. All right, so looking at this, we can see that we had an ABCX, ABCX, ABC, so a triple. There's the 4. So yes, I made slight changes here to put that whole C wave done at yesterday's low, yesterday's morning's low. And then coming out of that, let me come down, let me go to the 1 hour and see if I can break this up and show you. This actually, when you break it to the 15, is 5. Then it gets a little bit like, okay, what was all this? But it really does a B, C, 1, 2, 3, 4, 5, right? And that was PPI. So that was wave 2. So it's 1, that's a 2. And then we have 1, 2, 1, 2, 3, 4, 5, 3, 4, 5 of 3. And then we come down in a 4 and we come back in a 5, hopefully end up here. And then we'll call that wave A of minute wave 5, which will eventually be a zigzag, but it'll be a 5, 3, 5 up to those highs. And then once I get the B wave, then we're going to be running more fibs to kind of tag what it should look like to the upside and see if we can't get matches that are going to bring us in all. Nope, not that high. All up into here. Possibly is up into here, but I think we're going to stick to this, to the upside. I think it'll run out of steam pretty dang quickly. But again, we're heading into those earnings, so it could hang out and hang out and hang out unless we get some other news that's going to be like, you can hang out all you want, we're going to move. And it would be forced. So in other words, it's not like today, which was definitely just options related, pretty much, and covering and pushing and getting long and adjusting and all the different things that they do. It would be for a different reason. All right, so moving averages. On the hourly, we still have the 200 on top, even after that strong day. Look at that. At least our RSI is showing it. And even though it's a higher high, it's a lower high on the relative strength. So NASDAQ still up to its old tricks, being the weak link. Now, being that this is only 3, if anything, if this were to turn and just nosedive and come down and break this, it'll be tough. It'll be tough. It'll be tough to kind of figure that one out. But I can't say it will not happen. So bear in mind, if it starts to come off, it's going to do it just as fast as it went up, if not faster, because things tend to go down quicker than they go up. And it went up pretty fast today, pretty fast and steady, so the down could be really ugly, if and when it should. And I think, again, that type of downside will be different than this upside. If they have no reason to kind of come in and start making those adjustments to their positions, then it could be just a larger player saying, no, we're not going to let you have an expiration in NVDA at 900. And they come in and they just absolutely knock it down back to 850. And we've seen that before too. So all kinds of things can happen, folks. Moving averages, 200s on top and then the 50. So right now we got the 13 did manage on an hourly basis to get itself above both. Now, if the 20 comes up and the 50 gets up, that's going to be even stronger. But I got to tell you, I'm thinking the 50 that may not cross that by the time we get up and we're done with this. But these two should be above both, which they almost are. And that'll just lead the charge to take us higher. All right, that's going to be it for today. Again, tomorrow's expiration, we have two, what I would consider minor numbers, but you never know. And then more Fed people out speaking. Big thing for tomorrow, it is an expiration. And the next update, next Elliott wave update will be on Monday, the 15th. And I'll see about, I know I definitely should, but I'm looking to get back to doing more in-depth, not just only on the NASDAQ and the S&P, but I want to pull gold back in. It's having this most spectacular run. So I need to update gold, I need to update silver, and I need to update the treasuries. All those have been extremely active in the background, and as our focus has been on the equity markets. So in advance of all that, please have a very great trading day tomorrow. Have a wonderful weekend. And look for the podcasts on Saturday. And then on Monday, we'll have the Elliott Wave.